havens. Jonathan Cavenagh is currency strategist at Westpac. He joins us from Singapore. Jonathan, do you think it's realistic that the Swiss could come out today or in the near future and peg the franc to the euro?
Well, I guess the Swiss authorities have certainly not ruled out anything at this stage, and certainly the degree to which the stronger franc is hurting the Swiss economy does call for drastic action. But certainly, pegging it to the euro would be kind of, I guess that towards the end of our list of options that the Swiss authorities are likely to embark on. So at this stage, we cannot rule it out, but it does seem less likely. I think they're more likely to go down the path of trying to increase liquidity within their own domestic money market and make it increasingly unattractive to hold long Swiss positions, which is what they've been doing over the past few weeks.
And they have had some success with that.
Yeah, that's exactly right. I mean, I think this is part of the reason why we've seen the euro currency trading in a fairly resilient fashion, despite all the news that's been emanating out of the European area, as you've been discussing on your program just now. We've certainly seen a decent move higher in that euro-Swiss cross, which is obviously very important given how much Switzerland exports to the rest of Europe. So I think the Swiss National Bank can at least be somewhat satisfied that they've achieved a positive outcome, or certainly halted that very dramatic slide we've been seeing in both the euro-Swiss and also the dollar-Swiss currency pairs.
As we talk about the the Swiss franc being overvalued, what the heck is the euro doing at $1.44 given the problems, the debt crisis in the eurozone?
Yeah, well, it's been surprising to us to see it this resilient. I certainly think, as I just mentioned, part of the Swiss National Bank's intervention in their own domestic market has played a role in providing some support to euro. But also, I think, obviously, we cannot forget what's happening in the US at the moment. Obviously, the debt downgrade, the slower economic conditions, the Fed's commitment to lower interest rates for the next 2 years has also played a role in keeping the US dollar very much on the back foot. I think you also need to take into account Asian central bank reserve diversification is also likely to be playing a part in terms of keeping euro fairly well supported against the US dollar. But we still think it does have a date with a lower level, certainly up towards the 145 levels where we'd be looking to sell the euro dollar.
Right. It sounds, though, like there's just nowhere to go. I mean, that's why you've got the dollar and the euro and the Swiss franc in the position that they're in, because there really isn't anywhere else to go. So when does this holding pattern break? What has to happen for there to be a breakout in the currency markets?
Well, I think a lot depends on how the US data picture unfolds over the coming few weeks. Obviously, we've got Chairman Bernanke's Jackson Hole conference coming up later this month, but the US data, while being pretty poor, hasn't been disastrous, and it is not suggesting we're entering a recession just yet. We had IP data out overnight. Last week we had retail sales data, both stronger than expected. So if that trend were to continue, we could potentially see a bit of a breakout of the recent range trading for some of the risk currencies against the US dollar. But that could also provide a more bearish environment for the euro against the US dollar as well, given that the European data seems to be moving in the opposite direction.
What currency do you advise investors to buy right now?
Well, we're fairly long a number of Asian currencies at the moment. Asian growth is still humming along at a fairly reasonable pace. So we like things like the Korean won, the Malaysian ringgit, and obviously the Chinese renminbi. But we're long all those three currencies. We think the Aussie dollar and the New Zealand dollar can probably push higher as well, at least in the near term. But our preference at this stage is to be long the Aussie dollar versus the New Zealand dollar as well. We think that the domestic interest rate outlook for Australia has gone too far in terms of pricing in rate cuts, at least in the near term.
Just try and get a hold of that renminbi, correct? Jonathan Cavenagh at Westpac there for us.